On getting a mortgage. So the process involved in how you're going to go about getting a mortgage for either your first home or an investment property. Now you're going to have lots of available options to you. Right on the outset, I'm going to tell you straight up to use a mortgage broker in every instance, so no exceptions. So the mortgage brokers I recommend, I have a lot of business with Mortgage Choice, also Aussie Home Loans. So I mean, there are a number of more boutique brokers you can use. If you hear of good recommendations from boutique brokers, use them. But these are the two I recommend, and I have business with Mortgage Choice. I do a lot of business with Mortgage Choice, so I recommend them. But there is also Aussie. You could get a bad experience here. You could get a bad experience here. The reason for using a mortgage broker over, say, going to something like comparethemarket.com.au and doing your own research on this is because the mortgage brokers have access to servicing criteria and applications that are only available to them, and because of the volume of business they're putting through these banks, they can get you better rates and understand which loan products are going to be more suited to you. So if you think you're going to walk into your bank that you've been with for 20 years and they're going to give you a home loan and they're going to look after you, that will almost, or not always, but a lot of the time it will end up in a decline situation, like you actually getting financially declined for the mortgage. And I've even had that through a close friend recently who, ex-defence, same thing. I said to him, use a mortgage broker, no exemptions. He went into whichever bank it was, he got I think it was the decline, and he basically was trying to use a Dhoas, which is a Defence Force scheme, to get a discount on a home loan. So I've got a few things to say about that. I'll say that later. I just want to explain a few things about the process of getting a mortgage. So first up, you're obviously going to have to come up with your deposit. Now, your deposit could be anywhere from 5% genuine savings up to 20%, depending on your level of money you've got, income, whatever. The other thing I'll say is kids. If you've got kids, now I'm not saying anything against kids specifically, but what I'm saying is kids to a bank are an expense item. So if you're going into a bank, you're going to get a mortgage to try to buy a house, and you've got 2, 3, 4 kids, you've got to understand that the bank is doing a calculation based on those kids and how much they cost to bring up over 18 years of life. And what that's going to do, it's going to reduce your serviceability and the likelihood of you getting a loan approved by a bank. Now, a mortgage broker will explain this to you, so a little bit of planning has to be involved. Unfortunately, people get 5 steps into life, they have 2, 3, 4 kids, and then they find they can't get a mortgage. They can pay rent, they can qualify to get a rental property, but they can't get a mortgage for a house, which often would cost them less per week than it would, say, if they were renting. I mean, if it were up to me, I would change legislation to allow people with kids to give them actually additional benefits, because they have a responsibility to bring those kids up in a good household. But that's a whole other topic for another video. So I just wanted to show you, bottom line, use a mortgage broker. There are no exceptions to not using a mortgage broker. The mortgage broker has a legal obligation to you, and I say this to you as someone who has done the Cert 4 in finance and mortgage broking. They have a legal obligation to provide the best product most suited to you, regardless of commission. So they are legally required to do this. They cost you nothing. The costs are, the bank pays their commission. Yes, they get commission, the bank pays it. You do not pay an upfront commission to Mortgage Choice or Aussie or anyone else. The banks pay that to them. That's it, because they put through bulk loans. They're like a wholesale lender. Now, I'm just going to explain a few things. Like you could think, oh yeah, I'm so smart, I could go into comparethemarket.com.au and I can look for the best rate. And you're probably going to go, oh wow, look, 2.5%, oh, 2.5, 2.54. Now, the differences here, now I've had this argument, again, it's been with defence people. Defence people don't seem to understand this. The comparison rate and the advertised rate, these are two different rates. Now, the comparison rate is inclusive of all fees and expenses on the life of the loan at an average interest rate for, say, 30 years. So the bigger the spread, which is the difference between the advertised rate and the comparison rate, that 0.5% is fees. So you want that number to be as close as possible. So look at this one here from St. George, 2.54 to 2.56. Okay, now I've actually seen, lately I've seen the comparison rate actually be lower. Now they somehow must be crediting fees back to the account somehow. So technically it's a negative comparison rate. But the number you want to look at is the comparison rate and not the interest rate. So number one, understand what that is, what that comparison rate is and what that interest rate is. Understand that you must use a mortgage broker. Don't be foolish enough to think that you're smart and you're going to go on some website and you're going to... Every single one of these banks have different lending criteria. They have a different portfolio, different lending book, so to speak, a different clientele, all different walks of life, doctors, lawyers, whatever. They might be light in one area, heavy in one area. One lender might be willing to work with you a lot better than, say, another lender, and the mortgage broker is going to know all of these things. The mortgage broker is going to know which banks are chasing what types of customers, and they're going to get you the best deal possible suited to you. So number one, use a mortgage broker no matter what. There are no exceptions why you should not use a mortgage broker. It's almost idiotic to think that people think that there's some sort of scam going on here with mortgage brokers. One of the most regulated, if not the most regulated mortgage market in the world, in Australia. And I'll go on to Dhoas. So Dhoas is the Defence Housing Assistance. What was it? Defence Housing. Anyway, basically you get a discount for the length of service you've been in defence. Now the thing is with Dhoas lenders, now I'm not going to name a lender as to potentially getting sued. I'm just going to say be careful with anything related to Dhoas, because what you'll find is you've walked into the bank yourself. The bank has the obligation to provide you the best loan in that bank, and there might only be 3 loans in that bank. Whereas if you go to a mortgage broker, you're going to get 50 or 100 answers from that mortgage broker in one go. Okay, so every time you go to a bank and you apply for finance, you're going to get a credit check. So you want as little inquiries and credit checks as possible. So that's another reason why you want to use a mortgage broker, because he will put your numbers into the internal servicing side of the bank, which he has access to. He'll put you through a set of calculators. I'm not going to say what they are. I use them myself. What I generally do is I use a servicing calculator myself, and then I send it to him. I know whether I'm close or under or over, and I'm generally able to steer him and say, look, I think I'm comfortably servicing this, and I do it that way. But not everyone's going to be able to do that. I'm not even going to get into how to do that. That's more advanced. What I'm trying to get you to understand is the benefits of using a mortgage broker versus doing your own research on here, thinking you're smart, thinking you can find the best loan. This loan might sound really good and it might have horrible fees in it. So again, I'll use the example here. Bank of Australia, I've never even heard of it, 2.5% variable rate, comparison rate of 3.01%. Now, I actually had an argument with a defence guy the other day that was saying that what I was saying with the comparison rate was not accurate. Now, this is the actual definition that they have to legally put for the comparison rate. The comparison rate is a way of comparing loans by including both the advertised rate and the fees involved. The comparison rates are based on the credit of $150,000 in a term of 25 years and represents the effective rate of the loan. It is not based on the loan amount you have entered. Different terms, fees, or other loan amounts might result in a different comparison rate. But either way, you want the spread, which is the difference between this rate and this rate, to be as small as possible, and ideally you would want your comparison rate to be negative in a perfect world. Okay, so your broker will steer you through this. Just understand it is important to know the difference between the advertised rate and the comparison rate. Always use a mortgage broker. The thing that has been getting people declined in the last couple of years is something called the responsible lending laws. Sorry, I'm switching gears here a little bit. So the responsible lending laws were something that because we live in a bit of a nanny state, Australia, they like to micromanage us and tell us, to do even the most basic things. So the responsible lending laws changed a couple of years ago, whereby banks were allowed to enter in variable expenses calculations into loans. Now, if you budget very well, if you, like myself, I don't have a phone plan, I prepay my phone, I do things like that, I have solar, so I don't have an electricity bill. My weekly budget is actually extremely low. But what happened when these responsible lending laws came in is they had a standardized amount for every single person. Now, those expenses, those expense items, you have the ability to control yourself. Like if you start to run into trouble, you can stop buying those clothes or going out to dinners or whatever. So what's been happening, and what is the main reason people are getting declined for finance, in my view now, is these responsible lending laws. Now, they were due to change around March, April. I don't believe they've changed yet. They're a little bit worried about inflation at the moment, but I still think people need the flexibility to manage their own expenses, which they're going to do anyway, regardless of how the banks at APRA feel like they're going to regulate things like this. Anyway, bottom line, use a mortgage broker. What you're going to have to do is you're going to have to set yourself up for 3 months. So at the moment, what they're doing is they're looking at, we're going to get into the 5 C's of credit in another video. This is going to be a whole video just on this, the 5 C's of credit. So this, again, just understanding this is hugely powerful, but I'm going to do that in a separate video. What was I saying? The reasons people are getting declined at the moment is mostly because their responsible lending criteria is giving them a standardized calculation for every person. So you've got one kid, that kid costs X amount to bring up, whether he's at private school, public school, whether he's homeschooled, or whether your grocery bill's $300 or $400. It's whatever the bank says it is. Now, it wasn't even that far back. Banks had the ability to change those expenses, which would then increase your servicing and approval rate significantly. So basically, these responsible lending laws, while they sound good, they've actually hindered people getting into their own homes. And as you heard me say, COVID was the best. I mean, obviously a lot of people couldn't because they got unemployed and whatnot, but COVID was actually the best time to buy. That was the mid-cycle slowdown. It was always going to be. It's blue skies from here on, probably for the next 6-8 years, quite comfortably, in my opinion. Not financial advice, disclaimer. But basically what you're going to have to do is you're going to have to get 3 months of clean bank statements, and by clean I mean look at your expenses, look at your everything you're doing, save your deposit. The funds for your deposit have to be what's called seasoned funds, so they have to be sitting there for a certain amount of weeks or months, and then they're considered genuine savings. In some cases that's going to be really low, like 5%. In some cases they might want you to put up 20%. Now if you're putting less than 20% deposit down, you're going to have to pay a thing called lender's mortgage insurance. Now, lender's mortgage insurance is something that gets capitalised to the loan. So you've got a $500,000 loan, they add on, I don't know, 15 grand to the top of that loan, and it basically insures the bank. I don't actually understand how that's even legal, but that's just how things happen in this country. The bank, you're actually paying for the insurance for the bank if you default, and then they repossess your house and they still claim on the mortgage insurance. I don't understand how that was ever allowed to happen, but that is the system we live under. So if you're under that 20% deposit, you are going to end up paying that lender's mortgage insurance. Again, it's an opportunity cost. I don't believe there's much risk at the moment putting 10% down in property because of the direction it's going. Now, I can clearly see that. I've been saying that for some time. I've been copying a lot of shit online for the last 2 years. I'm hoping people now realising that rather than listening to someone like Mike Martins or He Says or any of those people, Martin North, oh my God, Martin North, anyone like that, if you're listening to these financial doom and gloomers, just turn them off, switch them off. There's a handful of people you can listen to. Um, you know, bottom line is you're going to have to prepare to do this. So it's going to be 3 months of you budgeting carefully, saving, looking at your expenses, don't doing stupid things, seeing if you can get access to that first home buyers grant before you get your loan. I don't know how that's going to work. I think basically they're going to expect you to front most of that money. First home buyers grant hasn't applied to me for a long time, so I actually don't know how that works. But the deposit itself, you're going to have to get a deposit together. It's going to have to be seasoned funds, saved up. Keep your spending to a minimum, be really good, because what they're doing at the moment, because of these responsible lending laws, is they're actually getting your 3 months bank statements and they're going line by line checking every single item on your bank statement. They're asking you, why did you spend $4.60 at Woolworths on Tuesday the 23rd of February? I'm exaggerating slightly, but they are checking them line by line. So, and then they're writing your calculations. They're checking, they're doing things that they really shouldn't be doing, in my view, because these are things you have control of in your own life. You have control to either spend more or rein in your expenses. That's just part of being a human being. That's not, you don't have to be any sort of financial wizard to be able to do that. So these responsible lending laws are actually stopping people getting into property. So I can't wait for them to go. It's actually led to a huge property shortage, like rental shortage. So now we've got rental spikes and that sort of thing. And it's preventing even investors from building houses to rent those houses to people. We've got a legitimate homeless crisis now. Like, I've never seen a rental environment like this. I've been through several of these property cycles now, and I've never seen what I would call in Australia. You wouldn't think Australia would be a country that has a, quotation marks, homeless crisis, but that's exactly what we're starting to have. And it's these responsible lending laws, which in government speak, it's double speak. It's actually the irresponsible lending laws, because it's removing your flexibility to raise or lower your own expenses due to your changing circumstances. They could be better, they could be worse. You need the flexibility yourself to be able to manage your finances so you can do these things without government interference. This is something you should have full control of. So your mortgage broker will walk you through this. Bottom line, use a mortgage broker. There are no exceptions. Beware the Dhoas lenders. All they generally do is they mark the loans up to mark them down, and they give you a big pat on the back and they make you think you're special. But often you're better off just using another normal lender, and you'll end up with a better rate, better conditions, better everything else. So go to the mortgage broker, get your 1 or 2 credit checks, and that it. Don't walk bank to bank to bank to bank and get decline after decline or even inquiries. You want as little inquiries as possible, and when you get an inquiry for finance, you want an approval for finance. Now, the mortgage brokers are the ones that are going to get you that. They're going to tell you that without doing a credit check. You can check your credit on a site called Wiser. I will just look it up right now. Check your own credit on a site called Wiser. So register on this. Now, this is not the same as a credit check, so to speak. Sorry, my internet's really slow tonight for some reason. It's Wiser, wiser.com.au. There we go, wiser.com.au, wisr.com.au. Now you can log in, you can check your credit scores, and it's Experian and I forget the other one. You can check both your credit scores. You can see if you're over 700, 750, you're starting to get a good credit score. So you're gonna be able to get finance. It's just who through. Obviously, you want 800 or better is going to give you the most options. But anything over probably a 700, 750, you're going to be looking at approvals. Speak to these people. They will do the calculations for you. They will work out who is most likely to approve you and they will give you the best product regardless of commission. So use a mortgage broker every time. There is no reason not to use a mortgage broker, okay? And don't get lured into these Dhoas lenders. There's only about 4 or 5 of them, maybe 7. And all they do is they mark the loans up to mark them down, and they give you a pat on the back, and you think you're getting some super deal, when in actual fact you can just go to the market, to the mortgage broker, and you can probably end up with a better rate. Now that's not always going to be the case. If you've got 15, 20 years service in defence, maybe your Dhoas credits are going to be so much that you're actually going to be making money on that, but you're going to have, in my view, a shitload of service before you start beating these free market loans, because there's just literally, with Dhoas, there's no competition. It's basically a monopoly. They're preying on the mentality of a 19, 20, 25-year-old, doesn't know a whole lot about money and finance. It's like any of those things. You know, car yards, for instance, you get out of basic training, you go into a car yard, you will drive out with a new car. There is no two ways about it. They love veterans for that shit. It's predatory lending in my view, but it is sort of what it is. So go to a mortgage broker, get a mortgage broker to look over your situation, clean your situation up for 3 months, have a seasoned fund, seasoned deposit, start speaking, start building a relationship with a mortgage broker. This is something that's going to take some time. There's a lot of loans going through at the moment, prices are rising. You're going to have to get a relationship with a mortgage broker beforehand. Ideally, you want a solid pre-approval when you sign a contract for a house, because you don't want to be losing deposits and having to find a new deal and lose 20 grand. You ideally want to throw a scenario, say, I want to spend up to $650,000, I've got $100,000 or whatever it is you've got. Get a relationship with a mortgage broker. There is no reason to not use a mortgage broker. Don't do the dumb thing and go on to here, which is, this is a site that compares mortgages, but this is not a mortgage broker. This is you getting retail information. These people are getting wholesale information from the banks versus retail. This is just a marketing tool. They're getting commission by signing people up. You can actually do the whole thing online yourself. You can, but go to people who are experts in the subject matter, okay? These people know exactly what they're doing. The volume of loans they're putting through, you're one person. You probably, maybe you've had one mortgage in the past, maybe you've had 2 mortgages in the past. These people are putting hundreds, if not thousands of loans through per week, per branch. So you have to, basically, you're silly if you're going to not use a mortgage broker. It's free to you. I'm expecting these responsible lending laws to go. That's dependent on inflation and how quickly, how inflation quickens. So I'm watching that very, very carefully. But they were planning to axe these responsible lending laws by April, and it hasn't happened. So I'm waiting personally for these to get axed, and that will make things a lot easier for people. The other thing that's come in that I'll talk about now, it's single parent home loan. I'll just talk about this while I'm doing this. So the single parent home loan. Okay. So this only happened the other day. Now this is a very, very new scheme that's come out. It's replaced the home builder grant to some degree. Now what it does, it uses the family home guarantee, allows single parents with deposits as small as 2% to be approved for a home loan, and the government puts the remaining deposit difference of 20% in the agreement, so that you're going to avoid your LMI, your lender's mortgage insurance. Now this is a good policy. I think this is a good policy. The problem is a lot of single parents are still going to struggle getting that 2% deposit and then having the income there minus the expenses to actually service the loan, unless they're high income earners. But there is some criteria there. So just look up, where is it? Just look up single parent home buyer scheme. Google that. I believe it allows you to withdraw money out of your super again as well to use for a house. So this has only happened in the last week. It is worth ringing up about that, but basically that allows you to put in a deposit as small as 2% and the government cover the 18% difference, which will avoid the LMI part of that. So bottom line, use a mortgage broker. Be very, very careful with the Dhoas lenders. Make sure the rate you're getting is better than the rate you can get. And you go to them anyway. You can go to Mortgage Choice and say, I'm a Dhoas person. They will go through the Dhoas lenders and show you the options. So there's no point walking into, say, NAB or CBA and just saying, I'm an ex-defence and I want a loan. Go to the brokers, tell them you've got Dhoas credits, and let them do the assessment. And they'll tell you straight away whether the Dhoas loan is cheaper than a loan from another lender. Okay, so it's sort of annoying to me when people, I know these people personally, and I tell them use a mortgage broker, and they don't do it, and they go to their bank and they get a no, and then they're like, I don't know what happened. Oh, well, I told you to go to a mortgage broker. That's what happened. So I'm not going to say that the Dhoas home loan providers, but just go to a mortgage broker, bottom line. Next video I'm going to cover the 5 C's of credit and why these are so important in understanding what this is and how this can get your loan over the line. As I said before, real estate, I believe, is the way for the everyman to get ahead. And at the moment, we're talking it's going to be looked at as the golden age of real estate in the next 6 to 8 years going forward. So we're talking about wartime level stimulus, COVID stimulus coming into the market. In my view, we're only halfway through the 18.6-year real estate cycle. Right now is where the big money is going to be made. You're going to be talking generational wealth for families, their kids, their grandkids. It's the best time to get into it. Understand, use a mortgage broker, plan ahead, keep your bank statements nice and clean. 3 months, keep them clean for 3 months. Pay slips, jobs, full-time jobs, contracts, stuff like that. You want keep everything nice and clean. Have all your documents ready. Give them to the mortgage broker. He will give you an answer, he or she, very quickly. And again, you can still get your Dhoas credits through Mortgage Choice or Aussie. You just tell them, I'm ex-defence, I have Dhoas, and they will tell you straight away, well, Dhoas gives you this, we can give you this. And I think you'll find 8 times out of 10, the normal lenders are better than the Dhoas credits, unless you've got a shitload of service, like 15 or 20 years service, and then maybe you're going to get a slightly better rate. It might even be a lot better. But certainly if you're only talking 5, 6, 7 years service, your rates are most likely going to be better using a traditional mortgage through a mortgage broker. Again, it's a free service. Why not? Well, you should use it. There's no reason you shouldn't use it. These people have a legal obligation to provide you the best product regardless of commission. Okay, we are in Australia the most regulated mortgage market in the world for a reason. Okay, and you literally can't go wrong. I mean, there is a chance you walk into Aussie and you get a broker who's incompetent. Same thing can happen with Mortgage Choice. Use your own judgment. Listen to other people. Other people say, yeah, I went to this broker. He was really good. Maybe find someone that's got similar situation to you. Talk to them. Figure out which broker they use. I use Mortgage Choice at the moment. That could change. I could end up using Aussie. But at the moment, I'm using Mortgage Choice. Anyway, I'm going to leave it there. So it's a bit long-winded. Hopefully it's been helpful. Bottom line, use a mortgage broker. Get your bank statements in order for 3 months. Learn about the deposit schemes and the new 2% single parent home deposit scheme. Learn about that. And in the next video, I'm going to discuss the 5 C's of credit. And this is hugely important. This is like the most important thing I can nearly tell you about getting a mortgage over the line is the 5 C's of credit. And I'm going to go over each and every one of these. I'm going to explain what they mean and how you can basically get a decline just by the first few things that come out of your mouth, the things you say, your paperwork. I'm not going to get into it too much in this video, but this is going to be the content of the next video, the 5 C's of credit and just how powerful this is. Anyway, thanks for watching.